also welcome Radhika Rao and Ashima Goyal to the panel. Radhika, we were discussing about the expectations earlier, but now Reserve Bank of India has stuck to the fact that they want to see the impact. But one important point was mentioned about Q4, whereby the inflation is expected to edge up and more so in Q1 of the next financial year. What is your take on that?
Yeah, hi. Certainly, I think heading into this meeting, we had expected two things: that the tone might be a bit more dovish, and that there could be some room to cut rates. But the guidance was really quite balanced, in the sense there were no specific cues to mention that the central bank has left room to cut rates. So we'll be taking note of that into our own assumptions. And just like we were expecting, inflation projection was cut quite sharply by almost 60 basis points to 3.1%. And I think their observation is absolutely along what we were expecting as well, which is that if you see the what was the trend between 2016 and 2019, whenever inflation drops to these levels, 2% or below that, thereafter in the next 12 months you tend to see a very sharp increase, and that's exactly what the governor also highlighted. And that's what we were expecting as well, which is for the headline CPI to edge back towards 4%. So if you see the revised trajectory that they have, inflation quarterly numbers, it does show it going back to 4% plus. We had just expected them to front load some easing, but after the tone today, it does look like it will take, the bar has been set higher. And they're not necessarily seeing any growth risks at this point, either from domestic or from global catalysts, and hence this very, I would say, neutral guidance in terms of further rate movements from here.